Welcome back. You're watching The Money Show on ET Now. Well, we've decided to take on board real estate in our Spend with TMS segment. JLL has released their residential sales report for the second quarter of this year, 2021. That's for the June quarter. And guess what? It surged 83% on a year-on-year basis, with Mumbai and Pune being one of the most popular markets, accounting for 42% of the total sales. That's not all. There have been several new launches as well. In fact, new launches have doubled in the second quarter over the same period last year. Now, of course, same period last year, we were grappling with COVID-19. But what's more is that even if we remove the base effect, it's clear that, customers seem to have lapped up on the very low housing finance cost. Interest rates are at rock bottom lows. Plus, developers in certain markets have also been providing moderate price discounts, attractive freebies, payment schemes such as no EMI for a year, etc. So let's understand more factors around this with Dr. Samantak. He's the Chief Economist and Head of Research and REIS with JLL. Dr. Das, thank you so much for taking out time. So 83% surge in sales. Yes, of course. I mean, I would imagine that in the corresponding quarter, sales were very, very low, maybe not zero, but very, very low. But what do you think has further caused home buyers to finally fulfill their dreams of owning a home, or perhaps even owning a second home as an investment?
Yeah, actually, this 83% is really on a low base. It's sounding very high. But I think if you see the trend from calendar year Q3, that means July, August, September, with the partial withdrawal of economy and lockdowns, we have seen this, increase in sales happening Q3, Q4 of 2020 calendar year. In Q1 also, we have seen 17% growth over the last period Q4, that's December quarter ending 2020. So there has been a progression altogether. So as you said rightly, affordable synergy is really playing a lot in this market. What is affordable synergy? Simple, it's in the form of historically low home loan rates, reduced stamp duty in certain states, of course, and very, very important is very realistic prices. That's very important for us to understand from a buyer's perspective. So we have seen this affordable housing really giving a boost, affordable synergies giving a boost to this sales for the last 3-4 quarters after the dismal Q2 of calendar year 2020. However, one thing is to be noted here, that if you see sequentially from Q1 first quarter to Q2 June quarter, there has been a decline to the tune of 23%. However, this decline in the pre-second wave is less compared to 61% we saw post-COVID, a decline. So post-second wave impact is 23% decline, and post-first wave was 63. So in all, in my opinion, the second wave impact is much less and housing sales are resilient.
Okay, you mentioned that a big chunk is also affordable housing, which obviously got a big boost as well from the government, various tax incentives as well provided over there. So was that the mix, the surge in sales that we've seen? Do you think that we saw more affordable housing units being sold? Is it that segment of the population that lapped up? What about, the middle ones or the more luxury ones?
The point is, you're right. I mean, the mid and affordable segment in the first half of this year, we have seen that more than 70% of the supply. Even in a city like Mumbai, where of course the definition of mid segment is slightly different than the rest, but still we see that mid and affordable housing is around 78% in Mumbai, the supply. In Bangalore, it's more than 80%. In Pune, it's 99%. So, if you see that if we believe the supply is creating its own demand, that's the story behind it. So if you have more affordable and mid-segment within your budget, sales will tend to go up definitely. And that's the reason if you see the sales in the peripheral suburbs of the relatively costly market like Mumbai has also taken a large share in the sales in Mumbai as well. So I would go by that even affordable and mid-segment supply is creating its own demand.
So if demand is so strong, like you mentioned, especially in the markets that you spoke about, the peripheral areas of the metros like Mumbai, Delhi, etc., have we finally seen some sort of pricing appreciation in those markets? Because you mentioned that average prices have remained stagnant on an overall basis. But do you think maybe the suburbs of the metros do show more promise in terms of appreciation? Or do you think that, once again, developers will get in there will be significantly new launches, inventory will increase, and once again, prices may remain stagnant?
I think very important to understand that prices have not gone up, and prices will remain stagnant or in the similar range-bound level in this year, whether it's peripheral areas or the core of the city. The simple reason is we have seen from the last peak 7-8 years back, the sales volume has come down to 40-50% in most of the cities. So what developers are trying to do is, in spite of the input cost that has gone up quite significantly, they are operating in very thin margin. That's why prices are kept more or less in the nominal terms in the same range. I don't think there will be any price upward pressure right now in this year at least, because developers, what they want is volumes of the sales volume to come back in the market. I think that's their priority now, and completion of projects in the market. So that will actually bring back the confidence level more. So that's the take. Prices will remain in the range-bound level. In fact, if you take the real price, there is, if you just with inflation, if you correct it, if you normalize it, it's actually a declining trend in prices over the years.
Okay, unfortunately, that's all the time we have, Dr. Das. Thank you so much for joining us and sharing snippets of the report. Massive surge in sales in Q2 as reported by JLL in their residential report, perhaps partly, boosted by the discounts, etc., offered by a lot of these developers, but, several other factors as well, especially given the fact that in the corresponding quarter, sales were very low. Dr. Das, thank you once again. And with that, we're out of time, so we're going to wrap it up on the show as well.